Welcome back. Still tuned into Market Sense. It is yo-yoing between that level, with that level of 5,400 on the Nifty, and the Bank Nifty is powering ahead. But of course, it's the currency markets which have been dominating all of the attention. Third day of record lows for the rupee. We have recovered on talks of RBI intervention. But what exactly is going on in that space? What are the cues that the money markets will be taking? And what are the levels that experts are talking about? Manisha Gupta here with all of those answers. Manisha.
Well, thank you so much for that, Ravan. We did see an all-time low at 64.13, and as you rightly pointed out, there was an RBI intervention at perhaps 63.85 kind of levels, as the dealers tell us, and we have seen a bit of an improvement coming in for the rupee from those kind of levels. But having said that, if you look at the 1 month NDF, that is trading at around 64.71. So that really tells you that there is perhaps further losses coming in for the currency. There is an interesting note that has come out from Nomura as well, where they say that there is no focus on improving productivity, infrastructure, or getting FDI back into the country. As of now, the RBI and the government are only working at stemming the flow of the currency, and that really is not the cause of all of that concern. So that is something that most of the people now seem to be voicing out, and that really is the real concern as well, because all the remedial measures that have come in from government have failed to stem the kind of decline that we have seen in rupee. Also, the CAD numbers have seen no improvement. Perhaps you have seen the equity markets continue to be jittery, and the inflation concerns, the growth concerns are still into the market there. But having said that, the important thing to watch out now would be the Fed meeting minutes that would be released tomorrow in the evening, and markets are awaiting, or rather all the asset classes are awaiting for any cue on tapering on QE, and ahead of that you are expected to see further choppiness come in for the currency. Well, talking about the levels then, and most of the big biggies are now talking about 65, 66 and even beyond that, till the time RBI doesn't come very strongly into the markets with perhaps major big forex intervention or sovereign bonds, as the markets have been talking about.
Okay, yep, no mention of that. Hopefully that happens sooner rather than later, at least a few people saying that. Manisha, thanks a lot for getting us that update. Let's get in a macro voice. DK Joshi, Principal and Director and Principal Consultant of Crisil, joins us right now on the show. Mr. Joshi, good having you. Thanks for joining in. Now, lots of things that lots of market participants want for this slide to stop. The question really is this pure fundamentals at play, and therefore even if small remedial measures are taken, will it just prove to be a bit of a band-aid before the slide continues, or you have a different view?
Well, I think there have been a number of measures that have been taken, but as you use the term band-aid, I think there have been short-term fixes. I think the fundamental cause of why the currency is sliding so much and why the sentiment is so weak, I think has to do with the fundamentals of the economy. The fundamentals of the economy have also been worsening over the last couple of months. As the new data comes in, industry has hardly grown, the service sector is slowing down, inflation is beginning to inch up, and current account deficit as of now continues to stay high. So I think in this environment where your external vulnerability is high and your internal vulnerability in terms of growth has also been increasing, the global factors matter a lot. And I think, as you were hearing, I think what the Fed does matters a lot, has a lot of impact on global sentiment, has a lot of impact on the liquidity. So I think all those things will do impact, or even mere speculation on what the Fed is going to do has an impact on the Indian market. So I think what the measures that have been taken so far, I think they will bear fruit going ahead. But I think immediately, I think markets need to get a sense that there is something being done to restore the growth prospects of the economy. Our growth attractiveness has definitely come down. So unless you do that, and unless I think you stabilize the current account deficit at lower levels, I think we'll remain vulnerable to such currency volatility and rupee weakness as well. I think I was looking at the past data for last couple of years, and I think what one notices is that the rupee has always been depreciating. I mean, as far as we have seen, I mean, from the time we got independence, I think only between 2004 to 2008, when our fundamentals improved, our growth improved, I think we saw appreciating trend in the currency. After the Lehman crisis, I think the trend has again been of currency continuously weakening, and now I think that has accentuated further this year as the fundamentals have weakened and so have the sentiments. So I think in this scenario, I think there is no good news from any front except maybe good rains this year, which are going to help our agriculture, and maybe exports picking up, because with rupee depreciating so sharply, it is bound to help some exporters.
Right, but Mr. Joshi, just going to touch upon a point that you were talking about. Yes, there is no doubt a lot of internal vulnerability, but the fact that QE is going to be a crucial factor and we're hearing of tapering off starting by September, that's as early as next month, does that open the door for further downside of the rupee because we're already staring at 64?
Yeah, it could give a shock, because I think this is QE at this much quantitative easing has never been attempted in history. So this is for the first time. So I think there is a lot of uncertainty surrounding its winding down. So I think it will have a shock element as and when it happens. Though markets are already factoring in, one could say that you have already priced in. But when the event actually happens, I think you could see a shock which could correct itself quickly, provided we work on our improving the fundamentals.
A lot of people are saying that they are surprised that a sovereign downgrade hasn't happened as yet. What's your feeling? I mean, do you think that's sooner rather than later going to happen?
Well, I don't have any comments on that. I mean, I'm not. I can't comment on that.
Fair call. Not a problem. The other bit would be, how do you believe the bond yields will behave in the near term? Because I don't think too many people expected the bond yields to do what they have done, and despite the prices being where they are, we aren't seeing a healthy FI inflow, and I guess the currency is to blame for that. What happens to the yields in the near term?
Yeah, currency and also the sentiment. I think yields, it all depends on whether the RBI takes off the extreme liquidity tightening measures, because I think they have had more than the desired impact. I mean, on the bond yields. I think once they are taken off, I think you will see yields again settling. I don't see the yield settling at these levels for extended period of time, and I do expect the extreme liquidity tightening measures to be taken back. So I think yields will come off, I think, from these levels. These are exceptionally high levels. I mean, if yields stay at these levels, I think the growth is going to go for a toss, and it's going to generate a lot of pain for a number of players in the system.
Mr. Joshi, we've been speaking to a number of experts on the channel, and we keep asking them what they think needs to be done. And the opinion is that hard decisions do need to be taken to stem the rupee's fall. Tight monetary and fiscal policies are needed in order to revive the economy. What, in your opinion, it needs to be done from the government side?
Well, I think one is, I think they need to maintain fiscal discipline, I think, which is very critical, and we have had some good news on that front, but I think whether they'll be able to maintain this year fiscal discipline this year needs to be seen. I think apart from that, I think if you really want to boost the sentiment, I think you have to do something on the ground. I think we have had reform measures, but on the ground, I think things have not moved. I mean, I'm talking of very simple things which people have been talking about, like making some of the projects happen, I mean, which are stuck because of some clearance or the other. I think if you start doing that, I think then what happens is the investments will slowly begin to pick up, and there'll be improved prospect for higher growth going ahead. That is not visible at this juncture, because I think the growth potential goes down when the investment levels suffer, and this is what is currently happening, and there is no sign of revival in private corporate investment. So I think unless you revive that sentiment, which can only happen by taking actions on the ground, I think unless that happens, I don't see the growth prospects reviving greatly for the Indian economy.
Mr. Joshi, is it fair?
And unless that happens, we will not see.
Right, go ahead.
No, please.
So is it fair to draw parallels to the situation that we witnessed in 1991? Because if you look at the inflation levels, they're now lower than what it was then. You have the forex reserves higher, and the deficit does seem to be in better shape.
Well, I think we are not as vulnerable as, I think it's always hard to compare the two time periods. I mean, because the vulnerabilities are very different at those. The global environment was very different at that time and is very different today. But yeah, I think in terms of, even I think if you look at the external vulnerability, the extent of foreign exchange reserves we have, I think it's about 6 months of imports. That's much higher than what we had in 1991, which was, I think, close to 15 days. So I think you are better positioned, I think, and you also have a backdrop of much superior performance in the pre-Lehman crisis period. But I think in terms of vulnerability, yeah, some of the parameters have worsened, but I don't think it's fair to draw a conclusion or compare these two time periods. They are quite different from each other. Okay. 91 and today's scenario.
Fine. Just one final question, really. What happens with the continuous slide in the currency and the oil bill rising, because that's something that Moody's has highlighted right now as well, that now the fuel subsidy bills would be much higher than what they were projected to be earlier. How bad does that make the scenario?
Well, I think the fuel subsidy bill will be higher, fertilizer subsidy will be higher. I think so. It's going to pressurize. I think two things have happened as far as the fuel is concerned. The rupee is depreciated, and the second, the crude prices themselves have gone up. I mean, they are currently at 110. So you have a double whammy, and the rupee, the global crude price, which is 110 today, I think in rupee terms is much higher than what it was in 2009, when it was, I think, close to 147. So the point I'm making is that the depreciation of the currency has completely wiped off any gains that we had from lower oil prices, and now actually oil prices have also started rising. So yeah, this is going to be a big pressure on the subsidy side. So I think what government needs to do is, I think, start raising the diesel prices even faster than they were doing earlier. Otherwise, I think it will have fiscal implications.
Okay, Mr. Joshi, thanks very much for taking the time out and joining in with your opinion. That's the Crisil view. The global and domestic factors will continue to play havoc when it comes to the currency. But let's also hear out more expert opinion. Some big voices that we spoke with on ET Now. Jim Walker, Managing Director and founder of Asianomics, believes that the rupee has been oversold and it may be the right time to go long on the Indian currency. He also believes that the ratings downgrade for India will only push the government to act on the worsening scenario.
Well, I think we're getting to the stage that should just purely be a long rupee trade. I think the dollar against a lot of other currencies is going to remain really pretty strong, but I do think the rupee has become oversold, and I think at this stage India is probably gaining significant competitiveness in international markets.